Hey guys, I'm David Brear and welcome to FinTech Insider On Air episode 52. This is the first on air of 2020, so very happy new year from everybody from 11FS. In our last episode, just before Christmas, Sarah was hosting with Jamie, who caught up with Bailey Kassar, who's the CEO of Toucan, the money and mental health app. Super insightful episode. If you missed it, head over to the 11FS YouTube channel. I think it's still floating around on Twitter. There's lots of people kind of getting involved in that as well. So this week we're going to be looking forward though. So this is all about the FinTech trends that we think are probably going to be the ones that are most impactful for 2020. And to kick us off with this, we looked at the biggest trends Forbes list, which, I mean, just that name in itself is pretty impressive. But they had, for 2020, it was all about hyper-personalization via big data and AI. It was all about robotic process automation. It was about conversational interfaces, blockchain, and mobile payments innovation. So what I'm going to be doing over the next, let's see how far we go with this really, Ali, is to try and dissect through these trends, talk through what we actually think some of these weird buzzwords actually might mean. And to do that, I thought, I've been quite frankly struggling with connecting my brain and my mouth the first week back from Christmas. But somebody far smarter than me to come and do this with me is Editor-in-Chief of FinTech Finance, Mr. AliPaterson. How's it going?
It's all good, David. Happy New Year.
Thank you very much. How was your break?
It was really good. My 4-year-old still believes in Santa, so we're kind of peak Santa vibes in the house at the moment.
Very nice. I mean, it was sad to take down the decorations. I found it sadder this year than most, right?
Yeah, I get very competitive with the lights outside, so we had about 6,000 lights in a tree outside.
Wow.
Which you can only really put up by climbing up there. So that was New Year's Day at the top of the tree trying to get these down because it takes about a day or two.
Goodness me, that is commitment, but well done you. All right. On that note, maybe let's have a look through the list then. Yeah. So there was some really interesting stuff that, Forbes highlighted, I think some of the really big trends. But the first one that they had was around hyper-personalization via big data and AI. I guess really when you sort of look at the advent of the internet, the promise with the advent of the internet was really not about digital wouldn't bring about this generic experience. It would be about using data, using the intelligence that they have behind the scenes to do things that humans just can't do, and then actually presenting up to you an experience that was really tailored to you. Now, that really hasn't been the case, has it? We haven't really seen that manifest itself. It's been digital transformation, definitely within FS, has been taking out people and paper. But do you think the promise of that now can start coming forward?
I hope so, because I was chatting about this with my wife last night, who I believe is watching, so hi Kim. Because in hyper-personalization, it's already happening there with Facebook and Cambridge Analytica and all of the exciting things there. They're very targeted, very personal adverts to achieve what they want to achieve, which is buy this stuff or vote a certain way. So the technology is there and it's kind of tried and tested. We're just not seeing it in financial services.
Yeah, and I guess, we've started to see, when I was back at Lloyds Banking Group, we implemented pretty low-level amounts of propensity modeling just in internet banking placements. And actually the impact of that was very significant. And it's obvious, you serve somebody something generic. Shampoo adverts for me don't work out so well, guys, just saying. But actually, my beard does need shampooing, so who am I kidding? The idea...
Beard shampoo.
Exactly, yeah, beard shampoo. But actually, being in a situation where you serve somebody something that isn't relevant, or you use your intelligence, your data to serve them something relevant. Now, in an ad sense, like you say, Google, Facebook, I'm a sucker for an Instagram advert. Those guys hit me hard these days. So, that stuff's working well. But I think doing it from an experiential perspective, so that your service and my service is different based on what they know about you and what your preferences are for tone of voice or how you're communicated with. I think that type of thing is going to get much hotter.
100%, especially, I know it's further down, but especially with things like chatbots, you can almost, the opportunities there are so, they're endless. You can literally spurt out lots of examples, like you can have the chatbots that, actually I can tell that this person, maybe we should actually give them a call now because they'd highly appreciate that. Or actually, this person just wants this answer. Do not send this person a link because they will never click on it. It can be completely personalized. The question is, how can they do it?
I think maybe the inhibitor on this one for, there's almost a dichotomy here. There's the fintechs maybe, because the inhibitor for this one within big organizations is often great, but I've got 200 years of data and I've got 17,000 different databases. But don't worry, we've got a single view of customer program that's going to sort all of this out in 2073.
Another one.
I know. So actually, like, being in a situation where they could have the power of this data together, I think people are almost paralyzed by opportunity. You know, if we wait for 6 years for the perfect propensity model, or do we serve up something that we think is better and test and learn? So maybe the difficulty here for banks is, I mean, banks, I don't want to say the data, data is the new oil, like was, I think 4 years ago, that was like buzzword at every conference.
Yep.
But actually the banks are sitting on an Aladdin's cave of data that actually, if they could really tap into it, then maybe the technology is at the point now where it's something that somebody can provide a service to them to do it for them. I personally, I don't know why something like Google hasn't deployed their AdSense capability and that technology at banks and provided this type of capability into banks 3-4 years ago, because they've sort of perfected it, right?
Yeah, well, that's a massive question itself. Why has Google not done this? What's holding them back? With this sort of level of hyper-personalization, I mean, if you compare it where we are today with it to say 5-10 years ago, it's leaps and bounds, but there's still a huge way to go. I think if it just takes one perfect example out there where I know, for example, UAB and I think it's Personetics and Maniga are working together to do, again, exactly this. And I know there's all sorts of other ones happening all around the globe. But if it can be done incredibly well and be an absolute game changer, then everybody else is going to follow suit.
Yeah, I agree. And I think definitely, I mean, the guys at Personetics, great company. Go check out their website. It's David Sonser, isn't it, over there?
And Darrell as well is their guy who's always at conferences. Really nice guy as well.
But they do, to the point that we're talking about, it isn't just about serving this ad versus this ad. It's about fundamentally changing what the experience actually is for consumers using products. And I think that's definitely is where we'll see. Hopefully, I mean, on this one, I guess it's like, it feels slightly mythbustery at this stage, but I guess it's like, I'm not convinced this year is going to be that year. I think we move forward a little bit. I think the capability gets better. I think, everything that machine learning and AI can do, the promise is still there. But I think, to your point, we'll believe it when we see somebody implement it at scale.
Yeah, the other flip side of it is if somebody implements it incredibly badly. I know your Ned, Chris Skinner, is constantly on Facebook complaining about, oh, I got sold this thing on Facebook. It's rubbish. Why did I ever do that? Never again. I think if banks go down that route and do one or two of those, there could be a huge drop in trust. And that's, I think, more of a danger for the neobanks if they go and do something, because they've got a lot of trust at the moment, and it wouldn't take much to completely turn that on its head if they make a big mistake like that.
Cool. All right. Well, we'll see if this one comes true. And also, Chris, stop buying shit on Facebook would be our advice. All right. Next up, we have robotic process automation. So, I mean, this is an interesting one because, I mean, RPA has been around for a long time, isn't it? And actually, if you kind of look at, I mean, there's some really good examples of, I mean, Bank of Ireland for me is always the organisation that I think have done this best in terms of, for anybody who doesn't know, robotic automation is essentially taking manual processes between systems that you have. And if any big organization, big banking organization out there built through success in mergers and acquisitions, you've got multiple monolithic architecture in the back office, you've got all of these different systems with all of these different manual processes. Now, rather than making that something that a human has to manually move data from A to B, or for processing purposes, build another system to sit between these things, then actually you can use automation to actually bridge those gaps. And for many organizations where they're looking at how can I create capability without necessarily fundamentally changing all of the technology in the back office. If you think about it, like rather than having a complete new kitchen, you've changed the doors and the tops, that type of vibe, right? Then actually this allows them to deliver the capability to their consumers without necessarily doing all of the work in the back office. But this has been around for a while, so it's interesting that suddenly it's really sort of catching fire.
Yeah, I was chatting actually to two different people working in this, but I don't actually think it's going to be the banks themselves doing this. I think it's going to be the outsourcers.
You think?
I think big outsourcer, if using RPA can get them from, if you want to get from A to Z, using RPA can get you from A to Y, and then little bit of human bit on top for the final bit. I think they're going to do that. I think it's going to come from the outsourcers to really sort of drive this because, again, a lot of banks have got a lot of different architecture, and bringing all that together can be tricky. If you're already working with a third party, it will make that third party more efficient, which can hopefully pass the savings on to the bank.
Maybe, yeah. I think the SIs definitely could sell this. I mean, there used to be when I used to work at Gartner before this. There was there's a vendor selection thing for RPA. It's like it doesn't matter what the question is, the answer is Blue Prism, and actually because those guys have just killed it in this space for such a long period of time. So I think the difficulty with this one is there's two things always within an organization, which is can you deliver it? Can you deliver the service? But can you deliver this service for a good unit price? Yeah. And this kind of solves half of that equation, which is you can start to deliver services that to your consumers or even to your employees that you couldn't do before. But it doesn't necessarily change the cost structuring, definitely from an OPEX problem within the organization. And if you look at, globally, you look at big banks, they have, among many problems, an OPEX problem. The cost of running their operations at this scale is multiple billions. It's why we see Lloyd's committing, $5 billion over the next 4 years. That Wells Fargo is like $9 billion a year. And actually, in a RPA sense, you don't retire anything. You don't decommission systems. You don't retire old places. You don't consolidate monoliths into a single instance. And actually, while this will allow them to create the capability, it doesn't actually build the argument internally for actually doing it properly, which is actually at some point you're going to have to get off those monoliths. At some point you're going to have to decommission things. So I think RPA is a bit of a gift and a curse. In some instances, it's a bit of a cheat. But if you're just looking at providing the service, provide the service.
Do you think? I don't know if this is a bank problem overall, but do you think obviously a lot of publicly listed companies they're looking at their quarterly results, they're looking for ways they can make very fast savings, and obviously RPA can be a very straightforward way of doing that, as opposed to it can sometimes, as you mentioned, it feel almost like sticking a plaster over it. It's the sellotape solution.
But to your point, with a short-term view of revenue changes or operational efficiencies, then actually it's the answer, isn't it? It's just difficult if you almost paint yourself into a corner to a certain degree where you can never really justify the change you need to make because you've made lots of small incremental things, But I agree with you. I think the challenge there is that big-scale platform transformations have become a bit of a joke, with everything that happened with TSB, and we've seen places like Nordea spend 1.6, 1.5 billion sort of putting in new core banking systems. So no CIO, no CTO, no CEO wants to face into 5 years of paralyzing their organization to put in a new system. So RPAs maybe I don't have to change the systems on my watch, and the next poor buggers are going to have to face into that problem,
Do you think, I would love to see a big bank create a little speedboat bank and just slowly, every couple of months, every year, migrate everything across to that, and then the entire old monolithic system can be gone, and a nice sort of safe way to do that. But no one seems to be really going down that route.
I mean, they are.
Well, yeah, but not at the...
At the scale.
Yeah, at the scale.
I mean, even if you look at something like Marcus, I'd say Marcus is that play. If you look at what Marcus has delivered, yes, it was a rate-catching, headline-grabbing thing, but if you listen to what Bo Hartman said on FinTech Insider, November or whatever it was last year, actually everything that was put in place was about moving from a 9 till 3 organization to a 24/7, 365 digital platform with a fundamentally different culture and a fundamentally different operating model. I mean, many of the organizations that we work with as well are taking that strategy because it's very much about if it takes too much time and too much effort, and actually the equivalent of changing 2 of your tires while you're driving down the motorway to do it, then actually building something small and scaling it might be a lot easier and a lot quicker and a lot more cost effective than trying to resuscitate the OAP in the corner type thing. That got really vivid, didn't it? So, but I think on the RPA side of things, I think this has been a trend that was been building. I think there are good enough cases that actually have been deployed into market now where people will feel confident that this is an answer. But I agree with you. I think this might be a sticky plaster when somebody's got a broken leg. All right, next up we had conversational interfaces. So according to Gartner, my ex-colleagues over there, by 2020, chatbots will interact with customers of 85% of banks and businesses. So by eliminating human involvement, which sounds terrifying, these interchanges are done much more productively and much more consistently, which, I mean, I can definitely buy from a chatbot perspective the consistency, especially if you've got really good AI off the back of it. And I think the impact of that consistency from a regulatory perspective, I think, is often a use case that's really sort of undersold, because I mean, if you're the FCA, what you're looking for in part of their mandate is just consistency of outcome for consumers. So, you know, me and you both have an interaction with Barclays. Is the advice you're given and the advice I'm given consistent in terms of you having a different advisor and me having a different advisor? That's something they care about a lot, because that's where you can get into mass scale mis-selling problems if the way your risk is calculated and my risk is calculated is different, right? So, you know, chatbots and AI and everything that sits behind it, whether actually these things, and from a conversational interface perspective, whether it's still a human doing it or whether it's, you know, in totality an AI, a computer that you're engaging with, I think that regulatory side of this will be huge.
Or it also ties in quite neatly with the hyper-personalization as well, because well, I was thinking about this. I was thinking about what chatbots are the ones that I think, do you know what, that was incredible service. The one that I absolutely love is GoDaddy. Every single time on that, I receive exactly what I want straight away. But then the amount of times on other chatbots, I'm just told to go to a link, and that's that. I can search for a link myself. Yeah. Easy peasy.
I mean, it's interesting when they, I mean, who was it? BT were notorious for this, weren't they? There was a chat interface, then they deep linked you into some forum website that probably didn't really answer your thing, but they just used it as like divergent tactic. It's like, please don't ring up, look at this thing. And it's that's the difference between, I mean, people in financial services don't always feel comfortable with self-service. But I love chatbots, if I'm honest with you. Like from my perspective, I'll do anything not to have to talk to a human at a bank. Like if you give me the ability to do everything via an interface, even if it's talking to a human via that thing, the idea of like spending my time, I mean, I spend enough time talking to fucking banks. Like on my weekend, I don't want to talk to another bank, you know what I mean? So like anything I can do to not have to engage with a bank via that thing. And I think everybody's like that. You know, you can chat and, you know, order that new credit card or, you know, change your address doing these things while you're watching TV, rather than it being a whole drama that you have to, you know, stop your life to kind of do these things, right? Is this part more and more of like banks fitting their services around consumers, or?
Yeah, I would say so, because nobody wants to have a call center working or a branch or whatever the channel may be open at 2 in the morning, but if you want to speak to a chatbot to change your address or to even make a query on, say, a payment or whatever it may be, chatbot is a perfect answer for that. The one thing I would say about it is it's the whole Terminator 2 thing again, which is a robot versus a robot backed up with people. Yeah. And a robot backed up with people, Terminator 2, always win.
Yeah. Yeah, it's the universal soldier versus Terminator argument we've had a few times before, isn't it? Yeah, it is an interesting one. I think, like as you say though, tied into AI. I mean, IBM with Watson and everything that they've been doing have been, I mean, again, plumbing away at this for 5-10 years now within
IBM are working on AI. That's the first I've heard of that.
But I mean, we had Devika, who used to be the chief of staff over there at Watson on air in November as well, actually. And actually, I remember first time I met her 3 or 4 years ago in this space, there was the promise of it then. I'm not sure, like this year, it's the year yet. I think there's, again, more and more commoditization around this stuff. It's kind of coming, but I remember, this is aging me now, but I remember for 5 years in a row, it was like mobile banking is going to be the thing, like mobiles are going to take over. And it was always almost an anticlimax when it happened. Yeah. I think it's going to be very similar with chatbots and AI. I think when it does happen, it won't be in the big sense that everybody thinks it's going to be, where branches are suddenly closed in the thousands and telephony centers are shut down. I do think, like you say, it's actually more universal soldier than Terminator. It's powering up people to be better humans and have conversations in a better way than it is, great, now we can take more people and more paper out of the process.
I also think it's not just on the retail customers. but we use PayPal in our business, and the chatbot on that is incredible, especially because what it does is it then, if it can't solve it, it then can say, do you want us to call, or do you want to speak to an actual person, or send a message, and you can actually get the call coming to you within about a minute.
And that's a nice touch, isn't it? Because it's like, that then doesn't make it your problem to phone up.
Yeah.
It makes it their problem to phone you, which again is...
IVRs, which are there.
Well, that's the thing, and then it makes it, again, IVRs is just exposing to a human your internal department structure. It's like, that's not helpful, but understanding your problem and directing it effectively is fantastic. All right, next up we had blockchain. I mean, Forbes definitely hit up the buzzwords on. They put AI, blockchain, conversational interfaces, and robotic process automation all in one thing. This is going to be the most SEO'd article I've ever seen in my entire life.
They missed Internet of Things, though.
Tis true. Maybe that's 2021.
Oh, yeah.
So blockchain in fintech is expected to reach 6.7 billion by 2023, and that's in the US alone, apparently. I mean, I'm not sure I believe any of the predictions around blockchain anymore, if I'm honest with you. Like, for a hot minute, for about 18 months, it was going to change the world and, cure cancer and do everything. And actually, at this stage, I'm, again, going back to the sort of Gartner territory, it's like we could not be more in the trough of disillusionment right now in terms of the sort of impact that blockchain really has had. I would say it's almost none. Other than the fact that a bunch of companies spent a bunch of money doing a thing and a load of people got rich on cryptocurrency for about 5 seconds, then, I mean, has this really changed anything?
The only times I've seen it be quite effective is when they're not even shouting about it. I believe it's actually, and correct me if I'm wrong, apologies Travis, I think it was Thought Machine that have actually got as part of a blockchain built into their system, but so, they don't mention it.
Yeah,
because it's brilliant.
So Thought Machine don't have blockchain, but they have smart contracts capability.
That's the one.
So they use smart contracts for an element of smart contracts, and a smart contract is essentially for anybody who's older than like 30 years old right now and remembers executable files when you were using Windows 95. That's essentially what a smart contract is. It's a button you press that makes a system of things happen. So we agree a contract. In an event that, I wear blue on a Wednesday, I have to pay Ali £50, it automates that process, right? That's what it does. And it makes sense because if you think of financial products, they're contracts. I sign up to give you this thing, you sign up to give me this amount of money. If this risk is this, if this event happens here, then actually these things will pay out and work. So for products to start being configured in that type of sense, where it's a if this then that type scenario, makes a whole lot of sense. But like you say, it's people are increasingly talking about blockchain-like rather than blockchain. I know if Simon was here, he'd tell us a whole different story on this one. So feel free to hate in the comments, Simon, on this one. But we'll probably move on reasonably swiftly. Okay?
I do think that one thing that I wouldn't be surprised to be in the news quite a lot this year is on public blockchains, blockchain poisoning. I think that could be quite where, especially with GDPR, if somebody goes onto a blockchain and publishes a load of personal information, all of a sudden, how do you get rid of that? It becomes quite tricky.
It is, at that stage, impossible, isn't it?
Yeah.
I mean, essentially, you would still have to have both of the keys to access the data, but it does mean that you can't eradicate the data. So for everything like the right to be forgotten, or actually the evidenceable element of your data being stored somewhere to show even just basic data protection.
Yeah.
So watch this space. That one's going to be quite difficult. All right, the last one that Forbes had was about mobile payments innovations. And if I'm honest with you, I think through the list, this one's where I'm like, yes. I mean, like, mobile payments is just everything. It's so, and not just the payments innovations, but mobile payments innovations. It's amazing how many companies you see out there who are basically forgetting completely that a mobile phone exists and we all carry one of them around with us, and building weird things with screens in that don't need screens. You carry a really nice screen around with you 24/7, you sleep about 4 inches away from it all the time, build things into where people actually are. So, I mean, what do you think on this one? We've seen Apple, we've seen Google, we've seen all these players do interesting things. This is just going to get hotter, right?
Absolutely. Well, the big thing that I think you brought up actually on the last news that I was on was that on the new Apple phone, you've got 5 hours when you run out of battery to still use it for NFC.
I didn't know that. It was somebody else.
Somebody
But that's amazing because, like, again, it was a real use case problem, wasn't wasn't it? So there was a lady on the underground in the UK who was fined £500, wasn't she?
Because she ran out of battery when using her Apple phone.
Yeah, so in the London Underground, you tap in and you tap out. Unlike New York, I think you only tap in. You only pay on the way in. Whereas actually, so for here, you pay to get into a closed loop system, which if you lose or your battery runs out on your mobile phone, you're sort of stuck in that system. So she couldn't evidence the fact she'd made the payment, so was charged £500 for the privilege. That's a very expensive trip on the Circle Line, I have to say. But now Apple have introduced transit mode, which firstly, you don't have to unlock your mobile phone to tap, which is great, and I've tested it a few times, works really well. And the second is that actually they store battery life, which I'll be honest, Apple are not famed for storing battery life, are they? But now that they are actually storing that battery life for, do you say 5 hours?
I think it's 5 hours, yeah.
Off the back of your battery dying, then you can still make payments, which is really, really positive, isn't it?
I mean, it's a perfect problem. I predict Mobile World Congress in February, Samsung will release their exact same thing on their new thing.
Very
I'll be shocked if they don't.
So do you think, though, with the payment side of things, I mean, obviously, the whole disruption in fintech started in payments, right? Yeah. We saw the Venmos and all of these, but, PayPal. PayPal was a fintech, right? Yeah. Now it's a corporate, but, yeah. So payments was the place this whole thing started. And it started kind of at that presentation layer. I mean, increasingly, payments are moving further and further and further down the stack. So now we've got payments that are integrated into hardware like the Apple one, integrated into, fundamentally the operating system rather than an app. Do you think the players that own the OS and the hardware are going to get more and more powerful in payments?
Yeah, kind of, but still, even with Google and Samsung, they're still linked to a card, which is then linked to a different payment rails. Sure. So there's still several layers for them to go. And Google haven't historically been that as vertically integrated as a lot of people expect them to be.
Yeah.
So no, I don't think they're going to be doing that. But I do think, particularly in the UK, mobile payments is only going to grow. And I kind of think that the US is going to maybe sort of leapfrog using chip and pin and go straight to mobile payments.
Maybe. I mean, we're definitely seeing it being adopted so much more. I mean, they've got it on the underground at the metro in New York now. So, we've always said, we've been saying this for a few years, but everywhere where the underground or the tube or the metro gets payments, it becomes mainstream. People suddenly start saying, why can't I do this in the corner shop or wherever? We've seen it in Hong Kong, we've seen it in South Africa, we've seen it here, obviously, with Oyster. I think there'll be an explosion of mobile payments this year. It will become, and not just tapping my phone to make a payment somewhere, but 9 out of 10 times I use Apple Pay, it's because I'm buying a train ticket or I'm buying Deliveroo for the 15th time this week. So it's like those types of mobile payments where it's actually within the device rather than necessarily the device being a payment instrument, very much sort of changes it. So
I also think on the mobile payment side of things, and I actually think Mexico is going to be an interesting ground. There's going to be a lot of payments being done over non-banks like WhatsApp. I know in Mexico, all the banks are scrambling to be able to send payments via WhatsApp. I can see that being successful, being replicated in other economies around the world.
Cool. Well, I fancy some work in Mexico for sure.
Oh, absolutely.
What else are you looking forward to then? What else sort of? There was a bunch of stuff that wasn't on this. We literally could talk for hours on this one in terms of shit that we're excited about. But what's the thing that probably stands out for you then of the things that weren't on the list?
Oh, Pokemon Go is going to be back this year.
Do you think?
Yeah, 100%.
There's a new movie coming soon, isn't there? Aren't they following up with a second one? So there'll be like I think so. So there'll be like another craze around Pokemon. So that makes sense to kind of push it again.
There's a few things. I think a lot of the neobanks are going to solidify themselves in what I refer to as the old world. Voice, cash. We've seen that with Starling and Monzo with the pay points. I think there's going to be a lot more globalization, but also I think we're going to start to see a lot of endpoints for some of the neos. I know Anne from Starling said earlier today that she was looking to go public in 2022.
Yeah,
and I wouldn't be surprised if there's a large acquisition. I know we always say it every year, but I wouldn't be surprised if there is a large acquisition, even if it's something unexpected, even like, I don't know, Ditto in France or whatever it may be.
Yeah, I mean, I guess we saw a flurry of kind of acquisitions with BBVA, with Simple, and and then obviously Feedall with BPCE, which didn't quite work out.
That was
in
a
that
weird
way.
one, wasn't it?
But I mean, for me, I think that is a great strategy for a big organisation to leapfrog. It's just whether they don't smash up the thing they buy, basically, because there's no point spending a bunch of money and then destroying the thing you've got. So, I mean, I said beginning of 2019 that I think Starling will be acquired by HSBC, and is vehemently denied it to me every time I brought it up to her. So don't. This is no insider trading in any way, shape, or form on this one in terms of investments on it. But I can see that type of thing happening, because it's like somebody like a HSBC will look to acquire an entity that actually, to your point earlier on, if you can't build it successfully, why not buy it and migrate? Because with what Starling have built, they've got a really, really good tech stack. They've got really good customer traction. They've got it in retail. They've got it in SME. They've got European capability to go into other areas. So you have a platform you could migrate into. So watch this. I mean, Anne says no, but I mean, we'll see what happens next.
I think we're going to see as well a lot of less chasing VC money, because you got to focus on the revenue, not just trying to get your valuation as big as you can. And when that starts to roll, otherwise we'll end up with another WeWork.
There you go. So the biggest trend of biggest trend of 2020 is going to be actually companies making money.
Oh, and McKinsey are buying you, right?
They wish. All right. On that note, that's probably all we have for this week. So where can people find out a little bit more about you, Ali?
I am at AliPaterson on Twitter. I'm trying and Instagram, Facebook. Add me. I'm quite easy to find, and I don't know how many events we're going to be at this year, but
I imagine
a fair few. So come and say hello.
Cool. As for me, you can find me over on Twitter at David Brear. Thank you so much for tuning in. If you want more insights like this, why not listen over on the FinTech Insider podcast? I think you can find that pretty much everywhere at this stage, but check out Spotify, iTunes, pretty much everywhere you want to find a podcast at this stage. And also, we have relaunched the 11FS newsletter. So we want to give you guys as much value as we can. So providing a snack-size roundup of everything that's happened in the week is pretty much what that's about. So if you head over to 11fs.com/newsletter, you can sign up for that now. And if you want another topic to be discussed on air, we'll just hit us up on podcasts@11fs.com or tweet us on @FinTech Insiders. See you guys. Bye.